what are some of the loans that contractors should absolutely stay away from?
You have to be really careful with how much you leverage for equipment.
How does a contractor's credit score affect loan approval and interest rates?
You got to know what a personal financial statement is.
The difference between being late on a payment and being in default is...
Well,
he's pulling my file.
Terry's file?
I knew it. What are some of the more common types of loans that contractors will use out there?
The biggest relationships you need to have in your business is...
If you could reach 1,000 people today, what would you tell them about banking?
First rule in getting a loan.
you got to know what you're signing. You want to work with somebody that's reasonable. You need to know your banker.
Welcome to Beers with Contractors.
All right. It is Thursday on Beers with Contractors. Terry, good to see you again.
Hey, how you doing, Will?
I am back from Vegas and World of Concrete last week, which was exhausting. And I just want to publicly apologize to our 5 listeners, Terry. To our listeners, I was in Vegas. Terry showed up to the studio here to get ready to go, open the fridge, and I had completely wiped out all the beer in the fridge. So he had to run to the nearest gas station and refill our stock. But I tell you what, this just shows your character, Terry. You even got my brand of beer and refilled another 12-pack, knowing I was 2 time zones away.
And I was going to give you such shit for making me do that. You know, you leave me here, you're off in Vegas having fun, you know, probably on the craps table. And you looked tired, haggard, just worn out. And I couldn't bring myself to do it.
Well, thanks for telling everybody to go watch the last episode.
Oh, yeah.
Well, bad Will looked. And it wasn't from partying.
Yeah, you want to see what Will looks like after a 12-hour bender at the craps table. You'll get to see that, boys and girls.
I behaved. I only had 2.5 hours of craps while I was there. Ended up a little just shy of $100, so take that as a win. But yeah, thanks. And I'm half impressed that you did not get me something just completely insulting, like some Clubbies or some Trulies or something like that. Like, you left me without beer, so now this is what you get. So you are a good friend, sir. I appreciate it very much.
I try.
Well, hey, before we get started, of course, a few announcements. We always have to thank our new sponsors. So, or not sponsors, subscribers. So Michael Mantos, Halifax Tile, Jose Marisa, Kyle J. Powell, Gage Brown, Daddy Mays 2.0. Makes you wonder who Daddy Mays 1.0 is. So thanks for subscribing. And if you get a chance, go ahead and like, subscribe, hit those buttons for us. Yeah, so I am excited about the guest that you brought today, Terry. You introduced me to this gentleman over one of our off-studio beers. I was bitching about banking. and sorry, it was one of those where he was a big-name bank, hard to even get somebody on the phone.
Yep.
To obviously hand them over the lowest risk deal ever on a Airbnb property that I have paid out free and clear. And then you got me a hold of this gentleman, and it was literally a 10-minute conversation, exchanging some details about kind of our financial statements, and then done. You know, it was like, yeah, let's get this thing moving. So just goes to show you that banking is still a human relationship. So I appreciate that, Terry.
Yep.
So to answer a lot of the questions for you contractors out there about the confusing world about banking, how it works, all that, I want to introduce today's Senior Vice President of First National Bank of Oklahoma, servicing and handling all types of loans and advice to contractors. We're going to cover a lot of loan and banking details today. Here to educate us and get our crayons out about Banking 101 is our Senior Vice President, Josh Adel. Josh, welcome to the party, sir.
Yeah. Thanks, Will. Appreciate it. Thanks, Terry. Thanks for having me.
Yeah, so what crime did you commit to have to become friends with Terry, Josh? How did that work out?
No. Well, he was nice enough to buy me a beer one time, so I probably just got sucked in, you know?
Yeah. First rule in getting a loan, buy your banker a beer. Got it. Ding. There we go. That's an easy one.
Yeah. No, I probably met Terry, gosh, it was maybe 10 or 12 years ago.
I think it's more like 15 at this point.
Oh, geez.
Yeah, we're getting old.
So what loan did you turn him down for on the first one? Just kidding. We're not going to.
Shoot. I wanted to talk about that one.
Yeah,
no.
You know, Terry, when they say, have you committed a felony, have you just not been checking that box? Is that what's going on?
Well, I haven't had to check that box in a long time.
Oh, okay. Yeah.
You know, it's funny, Will, you say get turned down, And that's what drove me to Josh is I got turned down from what I thought was one of the easiest things to get done. And I got just disheartened by one of those big name banks. And if it wasn't for a good friend of mine who made a phone call to a person, a real person,
Yeah.
I never would have been where I am.
Yeah. Well, and that restored my faith as well, because I think we're so used to getting beat up as contractors. There's a lot of also predatory just loan products out there that it's like sometimes you just need it. But, Josh, I know you didn't come out of the womb saying, hey, I'm going to be a banker. So first off, how did you get in this business?
Great question, man. Well, I went to OSU and wanted to help people with finances. I mean, that was I knew I liked business. I had kind of a passion in that direction. Didn't know if that was going to be in what area. It could have been in like estate planning or life insurance or banking, or there's lots of different avenues for that. And it just so happened that this was an opportunity to get on a small team with local ownership. So I was working directly for the bank president, who worked directly for the owner, and they lived here. And my interview was with two people. And so it felt good that I'd be learning from people who were seasoned, and I might have a quicker, learning trajectory and a path to understanding what it means to be a banker. And I didn't know I wanted to be a banker. But once I got into it, I really enjoyed it. I enjoyed meeting with people, talking through what they were going through, help them achieve their goals and get them to where they want to be as easily as possible. Because so many have this similar story to Terry's, where it's like, I'm filling out applications everywhere. I'm online, trying to get stuff with different companies. And it's really a ton of brain damage, when at the end of the day, you should be able to pick up the phone, talk through what you're thinking about with somebody, and they can kind of steer you in the right direction so you can make a reasonable choice on what you want to do. So,
Yeah.
Now, Josh, since I've been with you, you've helped me with commercial loans on property, lines of credit so I can run my business, and you've helped me with my personal home loan, right? What are some of the more common types of loans that contractors will use out there? And what are some of the pros and cons to those types?
man, that's a great question. Lines of credit, probably the most common. Okay. So most guys that are my customers that I see need to have a line of credit, because at times guys pay you slow and then you're just cash crunched. You're cash crunched for payroll, for all of your suppliers. I mean, it's a cash flow game. And so lines of credit are probably the most common. I've got guys that secure lines of credit with their accounts receivable and then their FF&E, which is like all their equipment and other assets in the business, right? So I have other customers that don't want to mess. There's a little bit more on the like financial requirements that you have to provide to the bank every month when you have a line of credit like that. And a lot of guys are a smaller shop. They're out there doing the jobs. They're also doing the billing. They're also collecting the money. They're also getting the financials. Like, they're a one-stop shop, and that can be hard. And so for those guys, we're typically looking for other collateral, like maybe their house or something like that, to get something that's out there that they can tap if they need to for those times when you need the cash and it's tight.
Yeah, well, and I think we get caught up in the whirlwind as contractors often. It's like, man, the upset customer's calling, the phone's ringing off the hook. Jimmy showed up late that day. Holy cow, we've got a customer that's paying us late. And it creates this panic, right? And I've got my own list of screw ups, Josh, but I would like to hear from your opinion, because you guys have a lot of great products, but what are some of the loans that contractors should absolutely stay away from?
I think you have to be really careful with how much you leverage for equipment and trucks. Mm-hmm. It's a really common practice to, at the end of the year, to lower your taxable income. You go get a brand new truck, you go get big trailer, whatever, right? Finance it. You don't have to pay a lot of money for that, but you get a big write-off that year. But that comes with a payment, and that's putting pressure on your monthly cash flow, and that could easily get out of hand. So to me, I think that's something that you could easily lose track of, and you have a couple slow months, a couple people paying you slow, that can really put you in a hard spot. So it's probably what I'd say. And the other one would be on your line of credit, especially if it's secured by receivables, right? I'm waiting on my customer to pay me. And once they pay me, if I don't go pay that line of credit down, that line of credit's always going to stay advanced and it's never going to get paid back. And then I'm going to run out of that capacity to be able to go get it again in the future when I need it. And a lot of guys, it's like that's part of learning how to use a line of credit, right? Like, I need this for my costs for the job. I'm going to advance on the line to go pay my supplier and my guys for the work done. When I get paid from the job, I got to pay the loan back, and then I keep the excess, right? And then I can go do that again because it's a line of credit. It goes up and down, and that's how it's supposed to work.
Yeah. I'm glad that you mentioned costs, because sometimes by the time that bill or check finally shows up, that money is spent before it hit the account. But the discipline of understanding costs, and we've had a lot of back and forth with some of listeners that listen to us on TikTok that don't understand what costs are, but the direct costs associated with that project, not the indirect costs that need to be coming out of the gross profit margin. So thank you for mentioning that. I'm already waiting for the trolls to start showing up, but I love talking to those guys, especially when they write in all caps and it's underlined and has lots of exclamation points. Terry's looking up.
They're angry at that point. Will.
He knows the conversation, that exact person, old Bob, wherever you are.
Josh, I mean, if I'm looking at applying for a loan as a contractor, what is the bank looking at or considering when approving me? What information do you need? What are like hey, we're going to give that guy that loan, or what are the red flags? You're like, oh, nope, walking away.
I mean, if it was you, Terry, I'd have a lot of red flags. So we'd have a lot of questions to ask.
Here it is. Actually, you know what? We should start the Terry jab counter. Just like we did. We had an attorney on, Josh, and every time we made an attorney joke, we would put the counter up. So the Terry jab counter is live.
Well, it is one of those things. Like, the more you do business with someone, right, the easier it is to have a relationship at the point where we can jab back and forth. But I do know, and I will testify to this, is that I can pick up the phone on the weekends or after hours and give Josh a call and just run some idea by him. And not just as a banker, but as someone who makes sound choices in life. And I don't know if everyone's going to have that relationship with their lender. Probably as many people as you deal with, Josh. I hope you don't, but I do appreciate it.
Yeah.
Well, here's the deal. You want to work with somebody that's reasonable, that you think has good judgment. Otherwise, it's going to be hard to trust what they're telling you.
Yep.
Right. And so I'm glad you're to that point. It's taken us 15 years. So I'm glad you're finally there. But no, seriously, I think the question was, if a guy comes in, is wanting a loan for a new business, right? So this is a new customer, someone I don't know. That was the question. Yeah. I want to know your story. I want to know how you got here. And I kind of want to know the story of why you're talking to the bank. Some people don't want to share the whole story, but to me, that sets the framework up for the relationship as a whole. Right, Terry, you know this, like, we're not a transactional bank. We want to be the bank for our customer. We want to handle your deposits. We want to handle your personal, loans, your business loans, your truck loans. We want to be that one-stop shop. Hey, I'm thinking about buying a business. Hey, I'm thinking about buying a house. Oh, I might want to get a rental. I mean, whatever it is, we want to be able to help provide advice and guidance for any of those situations. So understanding the whole picture is where I start with. I want to hear people's story. I want to know what got them to this point. And after that, we're really looking at how they've handled their financial house up to this point. Because a lot of that's going to show where they're at from a responsibility standpoint. In some cases, it sheds light a little bit on your responsibility, integrity, and how you handle your other stuff as well, right? And that should flow into your business.
Mm-hmm. Well, and that's actually going to lead us into the next question here, Josh, about, how does a contractor's, specifically their individual or company credit score, affect loan approval and interest rates, or is it asset driven? I know it's a balance of each. But, if I'm a new contractor, I am in the need. Obviously, people that don't need it, they're probably not knocking at your door, but I'm sure there are plenty that don't need it that leverage your services. But like, before I walk into that door, like, what's the best advice you can give to contractors? Say you need to be prepared on these few things.
Personal financial statement. You got to know what a personal financial statement is. And you have to be able to know what you own, what you owe. You need to understand your business's cash flow, and how that flows. That'll help tell a story to me or any other banker about why you need the loan. If they're looking to purchase a piece of equipment, it's understanding, well, how does that help your business? How is this increasing revenue for you or decreasing costs somewhere else to help my business? Because from there, you can kind of forecast in front to say, okay, I've been renting this John Deere, you're right, let's just call it, you've got a backhoe that you've been renting for every job. It's like, well, I'm spending this much for every job, and now I'm doing so many jobs a month that I'm spending $5,000 a month just renting this John Deere backhoe. Like, it's a lot of money. I'm still making money, that's fine, but does it make sense to buy? So knowing those numbers when you come in, it's going to help me, because for me, it's like, well, if you're spending $5,000 a month on a backhoe and it costs you, $75,000 to buy, that might make sense, right?
Yeah.
I mean, you're going to pay for it in a year and a half. So let's just do it.
Yeah.
But let's not amortize it over 10 years, right? If you can pay it off in a year and a half, let's pay it off in like 3. I'll write the note for 5, but like, let's plan on a payment that's 3 or less, and you just set that payment to pay it off quick. So that way you're out of that, pressure from the loan. So.
Well, and I'm glad you brought up amortization, which I want to come back around to, Josh. This is interesting because I want you to clarify for me, because this came up in our household. And Sydney and I, Terry knows my wife, Sydney, very well. And we like to debate and jockey back and forth all the time. Our son actually just got approved on his first contract. 20 years old, just got approved for his first house. 20 years old. Did something right here, Terry. It's crazy.
Sydney did something right.
Yeah, Sydney definitely got most of the people, from Sydney's side. He got a lot of the mouth and a little bit of the looks from me, but yeah, all the smarts came from Sydney. But anyway, we were jockeying back and forth because he obviously had to do the rigmarole of running credit scores and all that. And we were talking about oh yeah, they've been running credit since like the 50s or something like that. But that's not true, is it, Josh? Credit scores really didn't come prevalent until like the 80s. Is that right?
Yeah, and this really didn't come into a huge effect until more recently, like after the financial crisis. I mean, they've been hammering down on credit scores. And it's really just to fix fix.
Well, hold on, Josh. To our millennial listeners, what financial crisis?
Yeah, so in 2008, when the financial crisis happened, right? So there was a bunch of people doing stated income loans. Oh, I make $500,000, but really they weren't providing any documentation for it. Credit score requirements were a lot lower then. After that all happened and it really shook the banking world, they really teed up and got really zeroed in on credit scores. So that was kind of the big shift. And it was probably before then, though, if I'm being honest, Will, and I just don't remember it because I didn't start banking until 2008. So I started right at the financial crisis.
Perfect time to jump in. Everybody was
a great time
then. That's why you got hired and promoted in the same year.
Amazing.
Yeah. Man, I grew a business through that time. What a crazy time 08 and 09 was. It was just nuts.
It was nuts.
Well, and also my follow-up to the financial statement. You have a fantastic financial statement template that you've shared with me.
Oh, yeah. Mm-hmm.
And it's very easy to understand. It's very easy to put together. And I respect this. And Terry, this goes to show some of your credibility. Is Josh said, heck, if you don't want to use me for anything, just take the name off the top. This will work at any bank. And would you mind, Josh, if I shared that with our listeners, that template?
No, go for it. Yeah, go for it. Share it. It's on our website too, the same template. You can download it right off the website, and it's the personal financial statement form. It's an Excel file. You just delete the bank name out of it, and I save it and just update it whenever I want to so I can share it with my banker.
Yeah, and thanks for that. And we'll make sure to get any information from you after the show and put that in our show links. I just found it's super helpful. So thanks for that, Josh.
And Will, as you start, if you end up doing business with Josh and in First National Bank, what you'll realize is every year they'll mail you your credit statement, right? Like where your credit score is in relationship. And because my wife and I are on everything that we own, we get two. And just like Josh never fails to mention to me, my wife never does that. She has a higher credit score than I do, like by like 10 points. But it still bothers me to this day.
That's no surprise, Terry. Come on.
Yeah, no one here is surprised by that.
Yeah.
Oh, God, you suck, all of you.
You know, it's 2025. You know, it used to be who wears the pants in the house, but no. Who wears the highest credit score in the house?
No. But so, Josh, I mean, there is a difference, right, between working capital loans and long-term loans, right? And what is, like, where do you draw the line between a short-term line of credit or a short-term loan and a long-term loan?
This episode is sponsored by Performance, the bonus system designed to increase profits for your construction company. Performance incentivizes your production team for more efficient installs and rewards them when they beat your preset labor goals. So no more milking the clock and no more unnecessary gas station trips. Performance drives your team to work harder and smarter. Every construction company on Performance has seen a 7% decrease in direct labor costs or more. Click the link in the description or visit performance.co to schedule your demo today. That's PER4 MANCE.co. Reward your team, retain your team, grow your profits.
Most working capital loans should be shorter term. I mean, there are some that are longer term, especially if you're buying a business. You might need some working capital to grow. So that's another example, right? If you're growing and maybe you're entering a new space for your industry and you're expanding out and you need a runway for additional employees or crews or you name it, you might need a runway. For the bank, though, there's still got to be collateral. And so that's kind of the tricky part sometimes with those working capital loans. But that's where SBA loans are pretty helpful. So SBA has a 7A program that's very beneficial for smaller companies, contractors. If you're looking at purchasing a company or you're looking at expanding into a different area within your field, that could be really beneficial because sometimes the collateral requirements aren't as stringent, you could say, right? And you can sometimes get longer amortization for those loans, and it's a little bit safer for the bank. The bank has a guarantee from the SBA in case you didn't pay them back. The SBA would cover some of the loss. They're a little bit harder to get though, Terry. So like those longer term working capital loans are pretty rare. I do not do a ton of them. I do a lot of short-term working capital loans because those just make more sense to me. And maybe that's just because I'm dealing with more on the ground guy. I'm dealing with electricians and I'm dealing with roofers or, framers. And it's like a working capital loan for 5 years doesn't make a whole lot of sense. Working capital is what I need to run my business day to day for that month.
Okay.
Right. And if I'm getting a loan that I'm going to pay back over 5 years, it's like, well, you're kind of strapping yourself a little bit, I guess, is what I'm thinking. And we might need to be talking about a different type of loan. If you're needing a loan for working capital, my question to you would be, well, what's it going to buy? Right. Or what are you using the money for? If it's to go buy trucks, let's talk about truck loans. If it's going to invest in equipment, then okay, we're going to kind of zero in on that. I'm typically not looking at longer term working capital loans. Those are going to be lines of credit, the shorter term, revolving up and down. So did that answer your question?
Yeah.
Yeah. Was that train at your office, Josh, or ours, Terry?
That was mine. That was not a train either. That was a huge,
Terry,
like
you
a deep truck.
did you have beans today for lunch? I was like, what is that noise, boy?
I guarantee you someone probably got a loan for that train horn on their truck.
Yeah, that's right. Oh, that's funny. By the way, Josh, I do want to make sure when you get your next financial statement from Terry, he has acquired a bunch of these old wooden ducks in his previous property, and they're like ancient. And we have this concept where we're going to try to clean them up and put them on Jeeps around town, but do not let him list those as an asset. Okay.
Okay.
There's definitely a liability, just like you will.
Yeah.
Are they just are these old decoys, Terry? What are these?
No, so it's that property that I acquired up in Guthrie. And so in the basement of this thing, the previous, like the owner who had it from the 50s was an avid like duck hunter, goose hunter, something. And so it's all these old decoys. Some of them are out of cork, some of them are wood. Like they're really, they're neat and then kind of creepy, and they're just sitting in a corner right now. So if you want one, I can get you one.
Don't let him sell you, Josh. Don't let him sell you on these things. I've seen him.
That speaks to my heart. I'm an old duck hunter, so grew up doing that. Love it.
Terry, now ask for the business. Terry, you can sell them right now, bro.
Yeah, come on. Iron's hot.
Oh, that's funny. Hey, I want to shift a little bit, Josh. So, like, I love this. Terry, hold up your can, by the way. We had one of Terry's previous students on that right out of his program was making $60,000 a year. Who is this company, Terry? This is another one of your students, right?
Yeah, so this is a friend of mine or a former student, Daniel Gear, and he came to me, and he is within 12 months of starting his first business with his business partner. And he came to me, and he had some questions about closed bids and submitting bids and stuff like this. And the first thing I had to do, because I'm talking to him and he's talking about getting his business going and growing it, is I turned him on to the podcast and said, hey, we have a lot of smart people on. Yeah, like me and Will, not so much. But
Hey,
the
whoa,
people,
whoa.
the
Hey,
people we talk to are really good at this.
Yeah.
And it's a young person like that they're having all the same questions that you probably hear 1,000 times a year, Josh. You know, how do I do this? How do I get that? Like, what do I do? I mean, you know, if you had to talk about like the conversations that you have about 1,000 times, right? That if you could reach 1,000 people today, what would you tell them about banking?
I think you need to know your banker, because when it hits the fan, you need to be able to make a phone call. And sometimes that makes all the difference. You have a relationship with your bank, you've paid them on time, you've done business with them. I can't tell you, there's probably, but like there's at least in the last 2 months, handful of times where it's like, it would be hard for this customer to just go somewhere else and just get a $25,000 loan. And sometimes it's a signature loan. And that's not very common. You can't just go do that. But if you have a relationship, existing loans, history, payment history and stuff, like that's the kind of thing where, you know, that's possible. If so for me, it's number one is have a relationship with your banker. You should know them, and you should have their cell phone. If you don't have their cell phone, that's a red flag to me.
Yeah.
And you know, we've been doing business with each other for about 15 years, and we've done multiple loans and multiple purchases and stuff like that. And I'll always ask you, Josh, what the interest rate's going to be on the loan, but I've never gone out and shopped around. And I don't know if honestly, I don't know if I'm getting the lowest rate. My expectation is I'm getting a fair rate, but it is the level of customer service, and it is that attention to detail that you guys show that keeps me coming back day to day.
Well, and there you go. So I think you brought up one thing that for me is the biggest. When I first meet somebody, the quickest way for me to probably think that it's not going to be someone we end up doing business with is if the first thing they tell me, hey, I just want to know what are your terms and what are your rates? Because for me, then I know you're just looking for a transaction, and you might as well get on, you know, cabbage.com or go, you know, to Rocket Mortgage. I don't know, whatever the new online banking, you know, mortgage or loan system is, and you can try it there, because they're probably going to find you could probably Google and find a better rate somewhere. But once you get through 2 weeks of finally get through all their documentation and the fine print works out, it'll end up being around what we probably could have done. But I just wasn't advertising it, you know, on the internet at this basement price. So
Yeah. Well, and I'm glad you mentioned that, Josh, because we're still in kind of like, let's look through the lens of a startup company. right? So one of the things, Josh, I think you're doing really well is showing, I think we all believe that banking is just inserting numbers and an algorithm, and the customer is viewed as that, right? The customer is viewed as you're approved or you're not. But you're stating that still in a localized level, there's a lot of human existence that happens in the banking process. And it's just a breath of fresh air to hear that. And
That's out there. That's out there, Will. So if you're not getting that, if the people that are listening to your podcast aren't getting that, there are banks out there that are like that. And you're exactly right. No one wants to be another number or just treated like, I'm just one of a million and you don't even know me when I walk in or when I call up and I'm talking and like, well, I don't know who my officer is today. Can someone tell me about my loan?
yeah. Well, it's one of those where I'm glad that you introduced that. And I'm saying this as a 40-year-old man. I even viewed it as that way up until Terry introduced me to you. I was thinking, well, that was back in ancient history when I had that relationship, back in 2005, right? But
You're right.
now it's like, oh, no, that still exists, and it's so important. One of the best pieces of advice I was ever given by a very successful business owner here that exited recently. He said the biggest relationships you need to have in your business, the top three: good banker, good accountant, good attorney. And he's like, man, make the round table out of it because they each bring their own specialty and flavor, and it's powerful. So I do want to segue a little bit, still in the new business startup. Is you mentioned some things about SBA loans and how often, or any advice about using that to either buy a business or potentially buying out a partner of a business. What does that look like, Josh?
Anytime you're doing a government product, SBA, USDA, expect it to take longer and to be painful. So if you're not willing to go through that and if you need to move quick, it's probably not a good route. But it is a good option if you're looking to buy a new business. Buying out a partner, I'd have to get back to you on that, Will. There's some rules with cash out to a business, and I'd have to circle back on that one. But let's just say if I'm buying a business, I do think that it provides a structure that banks are a little more comfortable with versus just having a portfolio loan secured by blue sky and all business assets. And assuming there's no seller carryback, and there's a lot of different ways for you as the buyer of a business to structure that purchase to help lower your risk and help lower the risk for the bank. Like I said, a seller carry note a lot of times is a nice tax advantage for the seller because they don't have to pay capital gains tax right away on the full amount. They get to stretch that out as they're getting paid back. Plus, they might be able to earn a little interest and get a little bit more bang for their buck. This is pretty common. And then maybe the bank is just financing the difference there, right? And coming in and being a partner. So SBA is a great option to look at and consider, but there's really, depending on the deal, and this is why relationship's important, you can look at the big picture and just see what makes the most sense given your situation. Because a lot of times there's a speed component that's involved, and you may not have a lot of control over that. And an SBA loan could take you 90 days to get done.
Yeah, and I think in any of these, that's how it would typically go. And if it is moving that faster than that, it's probably not a good deal. Well, and granted, if it's held in probate or something like that, that could be an issue. But we'll let somebody else answer that on a different podcast.
Josh, like when I was just getting started, I mean, you had to do a lot of education with me in terms of terminology, banking, and all that type of stuff.
Still do.
Oh, damn, there it goes. Drake, throw another one on there. Bing, the Terry counter goes.
Spelling, math, yep, all of it.
Oh, damn, there's a twofer.
The problem is it's not wrong. I mean, to that point, are there going to be hidden fees or different costs that I need to be aware of if I'm starting out in business, taking a loan? Like, what should our contractors be looking for? What are some of the terms or some of the hidden costs that they should be aware of?
Oof. That's a really good question. I'll only speak for us because I'm not as familiar with other bank's products because it might be specific to the bank. One thing I'd try to be aware of, 'cause this is not for us, but one thing I'd be concerned about looking, if you're getting a line of credit, if there is an accelerated interest rate in the event of default, there's a lot of notes that are written out when you're signing it that say, hey, if you're in default, the bank has the right to accelerate or increase your interest rate up to a legal amount, right?
What defines a legal amount? That's
right. So in the note, it'll provide this provision to cure your default. So, hey, you're late 30 days. Here's your notice to cure. And if you don't cure it, the bank can pop your rate up to 30% or whatever's allowed by law.
holy.
And
That's crazy.
it's kind of like a credit card. Think about it. You get this 30-day float on a credit card, but if you don't pay the credit card back in full, they're going to charge you this 25% rate, right?
Yeah.
And it's a little bit like that, but it's in the event of default. And sometimes that happens, doesn't happen a lot, but I've seen it. And so I'd just be aware of what you're signing. You just got to know and ask the person that's in front of you to explain it. We have some default language in our loans as well. Been here 15 years and I've seen people go through foreclosure and all the way to the end and the rates never changed. It's a really bad look on a bank. You don't want to do that to, grandmama who can't pay her bills, and like it's a bad look, right? And there's reputation risk for the bank that does that. But I just think you need to be aware. You got to know what you're signing, right? Do you know what the collateral is on the loan? You should have had that conversation with your banker. But if you didn't realize equipment was thrown in there on the collateral section of the loan, and then you go out and try to sell that piece of equipment, you might have to have a pay down to get the bank to release that piece of equipment, right? So anyway, that's what I'd say. Make sure you understand what you're signing and have the other, the banker on the other side of the table explaining that.
So, and Josh, just to be clear, the difference between being late on a payment and being in default is...
Well,
Uh-oh, he's
Are
pulling
you
my
pulling
file.
Terry's file?
I knew it.
There it is. There's another Terry zinger. Hey, let's figure out, is Terry in
it's really
default
good
or
that you brought
default?
this up.
Terry, I meant
guess.
to call you about this, but
I'm getting Carrie, your wife, on the phone right now. Oh, look, you've even got a file on the wall there, Terry.
no, see, this is the thing. Josh
Sorry,
is
guys.
actually doing business.
According to Terry's loan documents, I'm just kidding. But there's lots of different types of default. Okay. So payment default's the most common. Most common. I don't pay the bank. I'm in default on the loan. I have not lived up to what I said I was going to do in the document, which is pay on time when the payment's due. Other forms could be falsifying your statements, so that's a form of default. Or, well, let's say like the business owner died. Okay. What happens then? That's a hard situation. And a bank's probably not going to call the note, but they'll probably want to talk to whoever's taking over the business to see how to transition that. But if whoever's taking it over is hostile, doesn't pay, that would be something the bank could use to say, well, we're just going to say the loan's in default then because the owner died and we need to be paid back now. So please pay us. Change in ownership. So if you sold a portion of the business to someone else and now there's a new owner, again, you talk to your bank, you probably figure out, okay, we need to include this guy in the loan and get that all worked out on paper. Most of the time, it's not a big deal because you're talking to your bank about it. You have a relationship. But if the bank felt like that made them insecure for some reason, they might use that as a way to say, you're potentially in default and you need to cure this. Help us figure this out in the next 30 days, please. So anyway, those are other forms of default, and there's provisions to help, to cure those with your bank so that way nothing crazy happens. And those are really rare. These were 0.0. We're talking about very low occurrences. So.
Yeah, and I'm glad you mentioned something about the transition of ownership of the company. And this was not in our show notes here, but it brings a question because I'm sure your bank, like many other banks, facilitated at least a transition of EIDL loans. during the COVID years where
Hundreds.
there's tons of government-backed loans from the EIDL.
Well, we did the PPP loans, Will. So we did hundreds of those PPP loans with
Yeah.
the Paycheck Protection Program loans.
Mhm.
The EIDL loans you actually had to apply through with the government for.
Yeah.
And they would provide you with those.
Yeah, and there's stipulations in the EIDL that said if the business transitions any ownership in part or in whole, that loan would be, called. And that's one of those things that's kind of looming for a lot of business owners. But have you seen or heard of any of those, including PPP, being recalled yet?
Nope. Most of the time when a bank's paid on time, they're not asking a lot of questions, Will.
Yeah, good point. Yeah, so if they're getting paid on time and that you're still within the payment or principal interest curve, it's like, sure, let's keep it going. So interesting to hear. And then, so a few other things, we wanted to cover before we ended up getting on our time here. Obviously, next stage, we talked a little bit about just the general business, a little bit more about the startup phase, but now kind of getting into let's just call it the back nine of the business. It's mature, it's scaling. By the way, Terry, that's a golf term. They just make.
I understand my terms, Will.
Yeah. By the way, actually, that's a good segue, Josh. How much does golf help with the approval process in banking? So look at him giggle.
Funny.
It does.
It's funny.
It is funny.
I don't think it helps, but I'll be honest. I mean, there's a lot of deals that happen on the golf course too. So it does happen.
Well, that's funny. For folks, later years, maybe they have a succession plan, maybe they don't. Are there ways to leverage that runway of the business, leverage the assets, things like that, to potentially finance the business to potential employees or sons, daughters, grandsons, daughters?
Yeah.
And what does that look like? Because I know there's a lot of folks aging, especially boomers in construction now, that, they want to pass this to their kids, but the children don't have 40 years of liquid just assets laying around and that the buildup of all that net worth because it's been on the owner's financial statements. So where can the business assist in succession plans for grandparents, parents passing it off to the kids?
And that's a great question. There's a lot of different ways. This is really fun for me. Like, I love talking about this because I'm thinking about, say I'm in the same boat. I want to know, how can I ensure this for my kids on down, to the grandkids someday. And I've seen it done a lot of different ways. I think the most successful ones and with the least amount of pressure on the new business owner. So let's just say your kids will, if they're taking over, right? Your parent's going to be the friendliest lender you can find, period. Right? I mean, they're not going to have these crazy, default language in, the terms of your deal. They miss a payment, call it a Christmas present. You know what I mean? A lot of times that seems to be what I've seen. So I've got an electrician I'm thinking of right now. In fact, I still like to use him. He's a great guy. And this is how he structured his is, okay, I want this much of a nest egg for me and your mom to go off and, get a lake house or beach house somewhere, have some money to live. I'll even work with you. And then once I'm paid off, you can have 100% of the company. But let's just call it, I need to get 300,000 or 500,000, right? We'll say 500,000. I'm writing this down because I got to remember. Terry, this is me taking notes, okay? Yeah. So it's good to take notes so you don't forget things.
We started the episode with crayons, but it sounds like he's using a pen.
That's what you want in your banker. Someone who's actually writing shit down, man. I'm telling you.
Well, so if you're selling your business, there's a tax implication there, right? Yeah. And if you have a note that you have to your company to pay you back, you're going to be paying a smaller tax on that over time versus a lump sum. So it's a win-win on both sides. Maybe you collect a little interest, maybe you don't. And if something happened to you and you passed away as the parent, obviously the business goes to that kid, right? Well, when you pass away, all of your assets, the market value changes. So like if you depreciated that asset completely, so like in your business assets, or if you have a note, there's a tax advantage to holding that because your heirs can then sell the assets at the current market value without paying a big capital gains tax. They could assume your note for you and then not pay it back, right? So if your note is one of your assets, they assume that as your heir. And now it's like, well, I can pay myself back this money. That's great. But there's no taxable event for them at that point, except for maybe if there was interest earned. So I'd have to defer to a CPA for real good tax advice there. But that's what I've seen other people do that seem to be really successful is, especially if I'm going to heirs, is I'm just going to work out a way to finance it for them so I can be the friendly lender for them, you know?
So, Josh, I know we're running up on time. Unlike me and Will, you have a full-time job. If any of our listeners want to get a hold of you and they either want to talk about opportunities or they just want information, how can they reach out? What contact information can you give them?
Best is going to be my email. Maybe we can put that in the show notes or something like that. It's jadel@fnbok.bank. And we can set up a time to schedule a call, meet in person. We can email back and forth a little bit. That's usually a good place to start. I like to have face-to-face meetings with people. That's my preference. And so a lot of times I am meeting with customers who are just coming in the bank, and I may not be available right away on the phone, but I will make time. So would love to meet with anyone, talk about what makes sense, try to, help them out. So.
And Josh, we ask all of our guests this same question because Will and I are the patron saints of screwing things up.
Oh, gosh.
Can you give us...
I love it. He's like, oh, gosh.
Hit me with it.
Did you prep Josh for this question, Terry? When I
No.
told you to prep Josh? Drop the bomb, Terry.
Can you give us a time in your life that you screwed up so bad in business that you can look back on it now and actually take some life lessons from it and be proud about it?
Yes. Okay. So this is the lesson. Be careful who you're partners with. All right. Whether that's family or friends or just someone that you think's a good guy that you want to go into business with. You have to be really, really smart and wise about who you go into business with because money changes people in weird ways. Okay. And at the end of the day, I would say that I value a relationship over money, regardless of that amount of money. And if a relationship can be severed by money, then you probably shouldn't go into business with them. Okay. Because here's the thing, no matter what the business is that you're doing, you can make a lot of money, you could lose, right? You could lose some money, you could make mistakes, you have a job that goes bad and you're 50 grand under, upside down. And is this person going to be someone that's going to cause a lot of friction, or are they going to help dig out of the hole with you and make it work? In the good times, are they going to let all that cash blind them and start, living a life that's the high roller life and not the life that's maybe you knew they lived when you guys decided to start the business, right? You have to be aligned, or, you know what I mean? Just got to be careful. You have to be careful with the partners that you have. And if at all possible, always maintain voting rights for your partnership that you're in. Because at the end of the day, you don't want to be stuck in a minority position unless it's with people you are lockstep with and agree 100% with. So that's what I would say. Do I need to give you specifics about how I screwed up, or is that good?
No, I think knowing Will and myself, I think we've all screwed up, probably in similar ways.
Yeah. Well, and the good news is this. Actually, this podcast is a net loss because we drink more than what we ever make from the show.
We do.
And our only actually monetized product is benefiting our nonprofit for kids. So it's like, Terry, we're good, right, bro?
Yeah, we're good. Yeah.
Boy, losing money can make people change a lot too, but it's so true. We've heard that from so many guests. That You said something interesting about wisdom, Josh, about having wisdom about choosing your business partner. Sometimes wisdom comes from having a shitty business partner.
Here,
And
well,
then you
that's
learn.
right. That's I've heard it's education. Sometimes we pay for it on the front end, or sometimes we pay for it on the back end. But either way, we're going to pay for it.
Yeah. Sometimes you take it in the back end too. Financially speaking, hopefully you edit that properly.
Did Terry tell you that one?
Well, he's a cattle farmer. They've got all sorts of weird things they do up there in Guthrie. But anyway, Josh, I can't thank you enough. The fact is in the world of contracting, there's so much involvement with the bank. I think you kind of resurrect and reset our mindset around, hey, no, it's a personal transaction just as much as it is a financial one. And I think we're conditioning ourselves quite a bit. You mentioned a cabbage.com before. Like go online, get something done in 15 minutes, and then find out you got 18% attached to those receivable loans that people don't know. So I appreciate the value that you bring. I appreciate the kind of reset of saying, hey, even though it's 2025 and then we're in this crazy world of AI and everything else, that no, they're still human beings. So, but nevertheless, I appreciate that. Terry, I know we took a lot of jabs at you today. But I am super proud of you too and thankful for you. So to our 5 listeners out there, we appreciate you guys most of all. And we look forward this next week to seeing you on another episode of Beers with Contractors. Cheers, everybody. Have a good one.
See ya.
And that's a wrap for today's episode of Beers with Contractors. We hope you enjoyed our chat as much as we did. Before we say our final goodbyes, a friendly reminder. Beers with Contractors encourages responsible drinking. If you choose to enjoy a beverage during our time together, please do so in moderation and only if you're of legal drinking age in your country or state. Furthermore, the advice and insights shared in this podcast are for informational purposes only. Always consult with professionals and experts in your field, and be sure to follow local laws and regulations regarding licensing and permits. We're here to help, entertain, and inspire, but your safety and compliance are important. So, as you head out into the world of construction and contracting, remember to build responsibly and make decisions that stand the test of time. Thanks for joining us today. We'll catch you on the next episode of Beers with Contractors. Until then, cheers to your success.